Hi, in this lesson, I want to share with you how you can trade volatility 75 using support and resistance with a combination of commodity channel index and our RSI indicator. So as for the indicator, here is the setting for the indicator. We have our RSI relative strength index. The period is 9. You apply it to close and you can see the style is 1 pixel. Then you change the background color. Mine is white, so if your own is black, you change it to black. Then we have our level 90, 10, 50 and 20. Then you click on save. After that, we have our commodity channel index. The period is 14. You apply it to close and our style is 2 pixel and the color is black. So these are the two indicators. So the next thing you need to do is for you to come to your H4 time frame and mark out your area of support and resistance. So when we talk about support and resistance, there are basically two types of support and resistance. We have a static support and resistance, and then we have a dynamic support and resistance. So when we said a static support and resistance, what exactly are we referring to? In a static support and resistance is when you see price making equal high and equal low. So in this scenario, this is a static support and resistance. All that price is doing is you'll be seeing price will be doing equal high and equal low. And whenever you have such scenario of equal high and equal low, we are having a static support and resistance. Then when we talk about dynamic support and resistance, is when the price is in a trend. Most often in a trend, you see price moving this way. So this particular higher in a downtrend, we have a lower high. So this lower high is what we identify as our dynamic support and resistance, while the fixed one is what we identify as static support and resistance. So having established that, here is our trading chart, and if you look at this, we'll mark out our area of support and resistance. So support and resistance is not a line, but is a zone. And what validates this zone and why we call it this support and resistance is because of the price movement. So you see the price bounce on this zone. It was coming from up, it hit here and went back up. So here is supporting the price back to the upside. It came back again, retest this zone for the second time and it went up. Look at here, it tapped into this zone and it went up. Here again and it went up. So we will most often we have static support and resistance in a ranging market. So in a ranging market, we are having what we have in a ranging market is static support and resistance. While in a trending market, we will have the dynamic support and resistance. So you can see here now, price came from here, from that resistance, came back. Second time, price went back to this resistance, and price came down, went there, came to this support, went to this resistance, came down again, went back to the resistance, came back to the support, to the resistance, to the support. So price couldn't break this support and here keep resisting the price. So this is what we refer to as static support and resistance, and this can be found in a ranging market. Now the question is, how do we make an entry in this scenario? So after you have marked out these zones, you can find your entry down H4 or you go to your H1. Okay, so let's look for those zones that we have marked. Beautiful. You can see those zones that we marked from our H4. So when these zones are marked, you will now be looking for a candlestick pattern, a reversal or a rejection candlestick pattern. And here you can see the price came back. Here we have a bearish candle. So we need a confirmation for us to have this buy to the upside. And here we have this candle followed by this, and we see this bullish movement. Although it was not an engulfing candle, the price went up, came back until we finally have this particular engulfing candlestick with a rejection, this. So this become our entry and our stop loss is below. And we have this validation using this. You will notice that price is in the support zone and our commodity channel index is at the level of 20 and 10 of our RSI, and then we now validate that we have a buy. Now let's look at this zone. Here now price pulled back to our level of resistance, and when price was in this zone, look at what happened. We have this bearish engulfing candle which gave us a reversal signal. Knowing that we are in a resistance, we are looking for opportunity to sell. And at the same time, you can see that our commodity channel index is at that level of 80, and then we have our stop loss above that level. So this is how you will repeat this continuously, and you can see how this works out most often. We are not saying it works out all the time, but most often here a bullish engulfing and it went up a little. You can see the same here. So now let's look at, and one thing with support and resistance, anytime a support is being broken, price will definitely come back and retest it to validate it as a resistance. So whenever a support is broken, it becomes a resistance. So here price can break this support that I've marked, which is this support here, and then price went, retest it, and then continue to the downside as a resistance. So when price break a support, it will retest it, and when the retest is validated that price is rejected, it becomes a resistance. And then we could have sold from here, having this bearish engulfing candle. Price still went back here to retest it another time, and that could have been a great entry. So talking about dynamic support and resistance. So in a case of dynamic support and resistance is when we are having a series of, like in this case, this is a lower high, and a lower high. So when price is making a trend, we have what we call dynamic support and resistance. So all we need to do, we need a 2 points for us to connect our trend line, and those 2 points are this. The greatest way to have this is, first price will come down. So now this is point A. So the next thing is price will come up, but it will not break this first level it has made. Then it will go down again. Then this become point B. So all you need to do now, connect your trend line and connect to that point A and point B. So now the next tendency is that when price come back to that line again, your resistance zone, price can tendency of retesting this zone and then continue to the downside. So there will be a resistance here, and that is why we call it dynamic resistance. So it is not a fixed zone because it varies. And if you look at this carefully, you can see that price made this point A from a resistance. We test it for the second time, and look at the third time. When it came, it gave us a candlestick formation. You can see here, and then have this entry to the downside. And here again, price came back, retest the same zone, and continue to the downside. So this is how simple this works. And each of those time price was at that point. There is something significant for us to note. Every time price was actually at that point, look at this, price is at this upside. Pay attention to our commodity channel index. You can see price was touching here. You pay attention to this. So this is a conference. Look at price is touching it, and then look at this. So this is how you can take advantage of this. So we can as well move to our H1 and wait for those touch. You can see. So we mark it out from H4, and on H1 you'll see that exactly the same pattern. Price is on it, and our commodity channel index is at the level of 90. And remember, we said this happened when we are in a direction of the trend. Here again, you can see that formation and look at our commodity channel index. So this is how we can take advantage of this strategy. You can see this, and you have your confirmation. So if this works, and I believe you have learned something new, thank you for watching this video, and do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you.